Hello students. So in this session, let us understand about credit card mechanism. So credit card. So in case to balance our additional expenses to overcome our daily routine life, so in this scenario, this credit card, it provides a major support for all the general public. See here, the meaning is, it is a facility that allows you to pay for various expenses. It comes with the set of credit limit. Yes, of course, there will be certain credit limit will be there. And so when you use this card for payments, the issuing entity, that company, it pays for your expenses on your behalf. See, instead of you, even though you are not having enough money with you in your card, in your limit, but still the company pays for you on behalf of you. Okay, so the entity then bills you for the expenses. Later date, they'll be late, anyhow you have to make the payment, right? So for the expenses incurred on the card, which you must repay by a predetermined due date. So predetermined date will be mentioned there. So during that date, definitely, so card holders, they have to make the payment. So how credit card works? So business merchants, so customers through internet, processor will be there, merchant bank processor will be there, and credit card interchange, credit card issuer. See, it is a big process like how the system actually works. So main benefit is like, even though the customers, if they are not having enough credit balance in their account, so they can able to make their, they can able to balance their expenses because of this credit card. So advantages in the sense like for consumers. So is simple and fast way to make purchases without carrying cash or checks. We need not to carry any cash with us or checkbooks with us. Okay, this credit card is more than enough while purchasing. They can be used in store, online, or even over the phone. Wherever we need, we can use this credit card. And credit card, after using credit card, responsibility can build a credit history which is essential for obtaining loan. See, one good thing is it actually builds a credit history. If you are properly repaying that, during that predetermined date, so that actually it is good for us. Okay, for obtaining loans or mortgages. Okay, whatever benefits for future. Okay, if we requiring for loan in the banks, whatever, so during that period, based on the credit history, so they will be providing loan for us. Okay, and for businesses, yes, accepting credit cards by increasing, sales will be increased. So that is what a very big point from on behalf of business side. Okay, so next is for financial institutions, in the sense their major benefit is like they can earn interest from the customers. So because of this credit card, so through additional interest will be charged, right? After that, they will be getting the benefits. And disadvantages in the sense for consumers, if card holders, they do not pay their balance in full each month. So that predetermined date is mentioned right there. If that is not paid, so high interest charges will be made on the consumer side. Okay, and lead to impulsive buying and overspending. Some at times, this card, it actually leads to too much of purchasing. Okay, overspending. So actually that is what one negative part of this thing. Next is for business side, must pay a percentage of each credit transactions, which actually reduce their profit margins. Okay, so and next is what this credit card transactions can be disputed by customers, leading to chargebacks, where the business loses the sale and may incur additional fee. So customers, they won't go for this additional fee. Definitely there might be some disputes arise. And next is what for financial institutions, in the sense, So they face the risk that sometimes customers may default on their payments. So definitely that results in the financial loss. So these are all the different disadvantages. Thank you all.